the benefit of going principal and interest versus interest only, and why you'd choose principal and interest versus interest only at different stages of your own investment journey. And obviously you're not an accountant or a financial advisor. This
So
is
I
certainly
can't tell. Yeah, don't do what Clay says.
I'm
but
talking about not just anyone's situation, more the pros and cons lists of like one way versus the other. And if I was, you're working with Ben Everingham and you're getting advice from my accountant as well, like Dale from Pool Group,
yeah,
and we're talking about my situation, what are the pros and cons of me paying P&I versus interest only?
Okay. P&I, your rate's going to be sharper, so you're paying principal and interest.
Almost 0.5% better at the moment.
Yep, I would say it's pretty accurate. I say that's a real grey thing. Like every bank's different.
Yeah.
Some banks will have an appetite for interest only. Some will have, if it's your own home, owner occupied, and your principal and interest, the banks love that. You can go interest only with some lenders on your own home, but the rate's going to be probably more than, this is really grey, but probably more than 0.5 higher, because they don't like you having your own home interest only, because they want you to pay that down.
Yeah.
Yeah. If you've got an investment property, you can go interest only, and the bank's pretty relaxed on that, because you can, maybe you want to pay down your home loan, your accountant will help you out here, but your investment property, the interest may be tax deductible, so you might not want to pay that down as fast as what you want to pay down your own home. So if you keep that on interest only, although the rate is higher, so you are paying more interest, you're paying only the interest, but you're paying more interest than if you pay principal and interest. So my thoughts are, for myself, my investment property is principal and interest, and it means that I'm paying that down. I have the ability to, if I ever got stuck or got in a position where, hey, the rates are really creeping up and getting a bit tight, I can flick that to interest only if I want to, which would mean that the interest is higher, but my repayment's lower. But just be wary, you might get caught in the trap where you think, I'll go interest only, it's going to save me a stack load. It doesn't actually save you as much as you think. Yeah. Ask your broker to say, hey, if I'm interest only, your payment's this much, interest only. By going P&I, your payment might only go up a fraction. Yeah. It might not be as big a jump as you think, but you're chipping away, you're paying less interest. And if you're in a position where you're living at home, you're buying an investment property, you might want to try and motivate yourself to build that equity, or you might want to,
So for me, like in my situation as an investor who's gone from like if you're thinking about it as a business, startup phase to maturing, go through different stages of growth cycles, I was interest only on all of my properties when I first started, because the goal was to save as much money as I could for my next deposit, and the principal was taking that away.
Yep.
At that phase of my journey, and I didn't want to use equity, I wanted to use cash for my deposits at that phase. So when I was very first accumulating, I had all of my properties on interest only, keep the income as high as possible, the costs on the properties for me as low as possible. Went out and bought a bunch of properties. Then interest rates got really low a while back. Like it was very low for a while. Like
twos.
Yeah, and even before that, like years and years and years sitting below 5% anyway. Like there was a golden run of like things being very low. When the rates got low, and the difference between paying, like at one point, the difference between paying principal and interest was 1%.
Yeah.
So the 1% difference across my portfolio was the principal, and because the rates were so low, it made sense to wipe as much debt as quickly as I could.
Yeah.
And I'd also moved from like buying being the focus to paying off debt. And so I'm like, worst case scenario, if I put them all to 30 years, 25 years at principal and interest, I'll own them outright.
Yeah.
But I'm a much better saver than my average client. And I'm disciplined as hell. And I'm very consistent. So if it's like, if I'm paying myself into an offset account, I'm not touching it. But I've got other clients that I'm like, you need to be paying principal because I know you. And I know that if you don't, you're not gonna like put the tax in there, the surplus rent in there, like the extra bit per week in there. Like you need to be chipping away and putting it into redraw off the home loan, because otherwise you're going to get caught out.
Yeah.
And I'm not saying that as advice. I'm more saying it as a behavioural habit. You're a spender or you're a saver.
It's a good question, Ben. I think that, or a good comment. I think that that's just being aware of yourself. I'm aware that I'm probably not like that. If I've ever made money in my life, it hasn't been through saving. I won't put it into an account. I need to be paying P&I. And I think it's about being aware of yourself and going, man, I am the guy that needs to make a commitment to a bank to pay P&I, therefore it will happen. Yeah, sometimes, especially with little kids, it's really, you have to be quite strict to be, Dad, can I have this? Yeah, of course you can, mate. You know, like, I need to be more, yeah, you know what I mean?
Well, I'm not strict with my kids. I'm very strict with my bank account.
No, but just in general, if it burns a hole in my pocket sometimes, you know?
Yeah, and so I've got like I pay myself, you know, a couple of $1,000s per week or whatever. And I'm like, I'll spend that to zero every week. And I know for some people listening to this, that's a lot of money. For others, that's like, you're only living off a couple of grand a week. Like, my lifestyle is not expensive.
Yeah.
Because I've sold 11 properties and paid endless amounts of tax, it's enabled me to like create a lifestyle above my means, because property has gone up in value. And I have had ones like yours that have done good. I've had ones that have done not good either. Nothing probably as good as the rat hole in such a short period of time. But I think, you know, as interest rates started to creep up, and my business and your business is very exposed to sentiment, the movement of money around the world, and if property's going up, phones are ringing. If property's going down, phones are ringing. If property's in the middle, people are just like, I'll just wait and see. So I'd prefer to be in like a market like we are now than the market we were last year, if you know what I mean?
Yeah.
Where just nothing's happening and everyone's in a holding pattern.
Yeah.
But I think I looked at the risk and I'm like, I'm going to go back to interest only on everything, because they normalize principal and interest loans, at least with my bank, were the same. And I'm like, the downside risk is they can't get inflation under control and I won't be able to refinance because my financials will look worse. And I actually went interest only to protect my cash flow.
Yeah.
And so I suppose the reason I'm saying that is I bounce between a lot more than a normal person, because I take advantage of temporary holes in the market. I also invest differently than a lot of other people as well, because my exposure to risk from doing it for so long is probably like much lower than the average investor now as well. And so cash flow is very important. As you know, once you start getting more properties behind you, paying P&I on one property is cool. Paying a P&I on
Fuse
at 9 or something at one point I had, like, is scary. Especially when your income is susceptible to the same changes that interest rates are, if you know what I mean. So I'm just hyper aware of that stuff, probably a bit more than I should be. And for the average person, every accountant in Australia is going to be like, pay P&I. You won't even notice in 20 years that you paid off 2/3 of your property. If you're thinking about buying an investment property in the next 3 to 6 months, then the team and I at Pumped on Property would love to offer you a one-on-one strategy session. To book the session, all you have to do is go to www.pumpedonproperty.com and click that free strategy session button. Now, in the session, we'll talk about exactly where you are right now, where you'd like to be longer term, and educate you deeply on the Australian property market. You can then take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each month. Either way, we look forward to continuing to help you build your property portfolio with confidence on your journey to financial freedom.